Hello, everyone. This is Noah and John. We are from UrbanDigs. We are talking Manhattan. And John, it's the reopen out there. We just went through a whole, post Labor Day. There was a sluggishness going on there. We're trying to figure out where the market is. We got the Stanton Hoch team here. We got Wesley Stanton. We got Jordan Hoch from Compass here. They're doing some action. They're doing some deals.
Yep.
What do you think, John?
Well, I'm excited. I mean, it's interesting because coming up to Labor Day, usually it's pretty quiet. This pre-Labor Day in terms of the actives, they were still rolling in. And then Labor Day, we had another big bump. So, I'm glad we have Wesley and Jordan here to kind of walk us through what the heck's going on out there.
Right. And that's what I'm hearing from a lot of managers I'm talking about. A lot of exclusives are being signed. So a lot of listings are coming on the market. We now have to shift in the next week or two and see what type of contracts are being signed. But in the meantime, Wesley, Jordan, thank you for joining us. Let's start high level, guys. You guys have been doing this 15 plus years. How is the market? What's going on out there? People want to know.
Yeah, I think it's a challenging market, right? But it also depends if you're a buyer or a seller. If you're a buyer, clearly this is the best opportunity you've had since 2008. And if you're a seller, it depends on what you're doing, right? So if you're buying up, if you have a smaller apartment, you're going to buy a larger apartment. This is 100% the time. The amount you've lost on that smaller apartment, percentage-wise, the dollar-wise, will be far less than the gain you're going to get on that larger asset once the appreciation begins again. And I'm a believer in New York. I think New York is going to come back, and if you're buying now,
well, I love the enthusiasm, man. You got to buy when there's blood on the streets. You got to buy.
When there's blood on the street, it's the truth. It's the truth. And those people who bought in the bottom of the market in 2008, if you bought 6 months after Lehman Brothers collapsed, you made a lot of money. And I think we're in that same kind of moment right now.
Well, there also are, albeit slower, but there are people that are willing to buy in New York City right now, which is a testament to the fact that there are a number of people that do see a future appreciation in real estate in Manhattan right now.
Right. So it sounds to me like, Jordan, you were mentioning those sellers that are looking to sell and buy up. It's interesting, John, we had Nikki Field on the other week, and she mentioned the exact same phenomenon, and she's pretty big. And she was saying, listen, if you're a seller and you're looking to buy up right now, the spread differential between where you're selling and then where you're ultimately buying, you're seeing a whole new shift in listing discount. Jordan, is that what you're saying right now, the luxury sector?
That the smart money is on the street, and they know New York is going to come back. Those restaurants are going to open. The amenities in New York are shut down right now, right? So there's no. Right. So sure, it's more fun to be in Westchester, the Hamptons right now, because you have the amenity of your backyard. But when those restaurants come back and the theater reopens and the museums are back, there's not much happening in the Hamptons when everything's open in Manhattan. And
right.
And so people know. Plus, if you think the commute stunk before, now let's add however many people just purchased in Westchester, and good luck getting on that train to New York in 12 months when everything opens, and suddenly there's a boost again there's a boost in the number of people in Westchester, and taking that train in on a Monday morning, and your life's going to suck, and suddenly you're going to I wish I didn't buy in Westchester. I wish I didn't buy in Connecticut. I wish I had bought that other apartment in New York when it was at a 15% discount.
And this is a year from now.
It's a year.
Winter in the city is a lot more palatable than winter in Westchester.
Right. Wesley, tell me about what you're seeing. Are you seeing the spreads in the higher price points? Are they going for a much higher listing discount?
Yeah, obviously the higher prices you get, the less buyers there are, whether that be just because there's less buyers or because there's more inventory, or because buyers were in the Hamptons, and hopefully they're slowly coming back right now. It seems like they are.
Mm-hmm.
So obviously the listing discount is going to be on a percentage basis bigger for those higher priced apartments than it would on like a $1.5 million apartment where there's far more buyers. And those buyers are more aggressive about owning a place right now. It's more of a necessity rather than, do I really need that bigger place, or do I really need that $5 million apartment?
Right.
With what's going on with new development, with what's going on with just inventory levels at the higher prices, and because of the pandemic, you're seeing bigger discounts trading up. And you're getting a lot better opportunity. So while you might take a slight hit on that 2 million, on that $1.5 million property, or even that $3 million property, you're stepping up to that 5 or 6 or whatever it is, or whatever step up you're making. You're just really, first of all, you're really just trading equity. And second of all, you're going to get a better deal at the better price. And when the market comes back, you should benefit greater.
Right. That makes a lot of sense. Let me ask you this. So, one of the things that we've noticed, and exactly what we said, is when we segment this market, it's the under 2 million market versus the over 2 million market in terms of sort of the way things, which things are moving and which things are lingering a bit. And when we think about why the things over 4 million are not really moving, we think, well, the demand is not there simply because, as Jordan pointed out earlier, people are in the Hamptons and, they haven't come back yet. So in your opinion, what are some of the milestones that these sort of luxury buyers are waiting for in order to come back?
So we've hit a couple of them. Phase 2 was a big one, right? The real estate brokers being able to show was a big one. Schools coming back or starting to come back is another milestone, right? The election is going to be another milestone. People generally, just unrelated to the pandemic, but any election season, people hesitate to make big purchases until they find out who wins. People being back in restaurants, theaters being back, and the biggest one is, when are people going to go back to the office?
Yeah.
Obviously, there's going to be more at-home working, remote working going forward. I don't think it's going to be as pronounced as some people think, at least not from the people that run companies that I've spoken to. But there is going to be more, but there will be people in offices. And once that happens, the city will be back, at least in terms of the people that live here, so that people can actually physically see the apartments.
Right. Do you guys have a timeline?
Milestones that I think will happen, before transactions come back to 100%.
Wesley or Jordan, do you guys have a timeline for this kind of recovery?
You should ask President Trump. Have you spoken to him lately about this? When these vaccines are going to come out? I think it's up to the government, and it's going to be up to when this vaccine comes. I think that's the major one, right? Vaccine comes back, and suddenly life's back to normal, and now I'm stuck on a train coming from Westchester, and that's
right. Well, it's not even the trains, and I can just testify to this because I've been out in Long Island this summer, going back to the city here and there, and traffic on 495 Northern State, it's out of control at early hours in the morning. It's just people are not even riding the trains, they're riding their cars right now, and it's public transportation. That's another one of those things, Wesley, I think is another milestone. Like, once that gets cleaned up, you need a lot of these things.
See, it only takes a short amount of time for people to forget. Oh, I'm sorry, Wes. It only takes a short amount of.
Go ahead, Jordan.
It only takes a short amount of time to figure for people to forget how rough those commutes were. And I think that's what pushed people into Manhattan to begin with over the 20 years that led. But people's memories are short, and a lot of the people who bought these smaller apartments don't remember anymore that the commute used to be brutal. And that's why people were staying, and they're going to remember soon.
Yeah, I think there's so many different elements going on over here. I mean, I think this whole COVID thing was an accelerant. This whole thing accelerated. Anyone that was thinking of potentially selling in the next couple of years, this whole thing just expedited that decision real quick. So I think all those people that really were thinking about getting out of New York made that decision, and they're probably out already. I think things are starting to slow down a little bit in terms of that desperate seller pool, or those getting out for the fear trade, et cetera, because it's not like it was 4 or 5 months ago. The people I'm talking to on the market right now are telling me that the sellers are just not fearful. They're not desperate. So now you have non-desperate, non-fearful sellers with opportunistic buyers. And here we are with a big spread.
I'd be interested in seeing what's going to happen with the suburbs in 6 to 12 months with regard to pricing, because I do feel like there's going to be, while there's this shift outside the city, I think it's that pendulum's going to swing back. When it swings back is a different story, but we've been seeing on part of our buyers a lot of enthusiasm to take advantage of the current pricing. Now, not everybody is going to be ridiculously negotiable, but there are deals to be made right now. And a lot of the people we're talking about are people who were around in 2008 and hesitated and kicked themselves for it. And they're not going to miss the boat this time.
Is that the makeup of the buyers? If you got to describe the makeup of the buyer out there today, the buyer profile, how would you describe that?
I would say, one part about it is obviously the people that remember 2008, didn't make a move, or did make a move and made a fortune and want to try it again. So that's one part, the people that are very kind of numbers driven, that are looking to, to kind of get the best value, and they're recognizing that this will be the best time, at least in the last 10 years, to get a property in Manhattan. The next is, as we were talking about before, the people looking to trade up. The people that recognize that, I need more space, I need outdoor space, I want to move to Brooklyn, I want to move downtown, whatever it is, now is the time to take advantage of that. Right now is the time to get that. Mortgage rates are super low.
What about investors? You got any investors coming at your door?
The problem with the investors right now is that the cap rates are still so low in Manhattan. Like there's better investments if you're going down to Florida. So right. I'm not seeing a lot of that. Wes, are you?
I mean, I'm seeing a few. I'm seeing a few. Obviously, it's a little more difficult to make deals when unless the investor is hyper focused on New York.
Right.
There's other deals to be made.
Yeah.
There's pain all over the country, so it's not like that New York is the only place feeling pain, and therefore investors can only focus on New York.
Let me ask you this: if
pricing has escalated in over the last 20 years,
right?
We also have a slowdown in the rental market, so which will come back obviously, but but when and how, it's hard to kind of price that in from an investment standpoint.
Right.
Unless it's just a ridiculously low deal, which, as you were saying before, not every seller is really is that desperate.
Right. Let me ask you this: on the buy side, if you get a call from a buyer, maybe you've been working with them past, but they're just kind of calling to check out the market, and they're interested in certain units, how are you speaking to them in terms of what sort of discount they can expect, or do you even have that conversation with a buyer?
Yeah, absolutely. I think on the low, it depends on which side of the market we're at, right? So on the lower end of the market, I think we get 8 to 10% discounts right now, under that $2 million mark. As you get closer to 4 million and above, it's closer to 10 to 15%. And the higher you go, the higher the discount. But like Noah was saying just a minute ago, it's going to be interesting to see what the spreads are, because we have these sellers that maybe aren't 100% desperate, and you have these buyers that are looking for deals.
Yeah.
And in all honesty, if you put yourself in the mindset of a buyer right now, I don't think buyers are moving forward unless they feel like they're getting a good deal, unless there's a specific personal reason where the money almost doesn't matter. Like, I need outdoor space for my family and I don't want to move out of the city.
Yeah.
So like, for example, the Park Slope townhouse market is hot. We have one on right now, and we got 40 people to see it in 5 days. So, there's the negotiability on a Park Slope townhouse is very small right now. Yep. Whereas going to, a $10 million new development property on the Upper East Side, the negotiation is going to be sizable. Right. So it just depends on what you're looking at.
Let me just jump in there, because I think you bring up something that's very interesting. And that is, especially on the buy side, buyers are very much have a herd mentality. And in the old days, when you had an open house and you walked in and it's jam packed and it's body to body, you're on the sign up sheet, you kind of get the visceral sense that, okay, this is a popular place. I need to be a little bit of aggressive. But in this environment, when you're seeing things one at a time and you really have no concept as a buyer of who else is seeing this and what the market is for this in terms of just general attention, how do you generate that sort of that sort of animal instinct in buyers?
Okay, so for example, on the townhouse, when we sold it, we did 20-minute appointments or 30-minute appointments, and people coming, obviously everything was socially distant and everything, but when people come, only one person's in the townhouse at a time, but people come and they see the person leaving, right? And then they see the next person coming afterward. Mm-hmm. So if you have a product that has that traffic and can capture that excitement on the buyers, you can create anxiety and stress and urgency on the buyers to be able to put in a good price.
But I have a better idea. If you don't have such a great asset like Wes is talking about, I think you just need to be smart. You need to price strategically. It's a relative value compared to your unit, compared to the unit next door, and you need to create that. You need to create that relative value proposition. That this is going to be a better unit because you're pricing it better and you're working harder on staging and you're making the product look better. So you got a better priced unit that looks better, and hopefully they pull the trigger. And it's also about hustle, right?
Sellers also have to look at their competition and take a really good, honest approach to how does my property stand out amongst the other things that the few amount of buyers are looking at right now. If it's not the best, you're dead in the water.
Yeah.
Right. And I think that's the key.
Staging, timing, and exactly what Jordan's speaking about. We put in a lot of effort to make sure that our properties stand out, because right now, as Jordan would say, the bench is very shallow for most properties.
Yeah, I think that's an excellent point. If I could sort of use that as a transition, can you talk about the new development world? In which case, you have a lot of these things which look fantastic, but the developers sometimes are limited into how well they can price relative to their competition. What are you seeing out there in the new devs?
It depends on their investors. It depends on their cap stack, right? If you have a product that, your release prices are at 1,800 a square foot, it's going to be hard to price things under 1,800 square foot without getting the bank to agree with you.
Mm-hmm.
And there's a lot of projects that were conceived 3 or 4 years ago when 1,800 a square foot was a fallback. Now 1,800 a square foot is a reality, right? So unless you have a bank or a mezz lender who doesn't want the property and just wants out of it, you might not have the option then to price it higher. Plus also you have developers, they want to make a profit too. And you don't make a profit by losing money, right? So sometimes they have time, they're going to wait. So they're not as negotiable. Whether that's realistic or not is another story. Mm-hmm. We just did it, but then there's other developers that, either have a low basis or they, just want out, for whatever reason, and they're pricing to the market. We just did a deal where, in terms of what the listed price is to what we negotiate, it's only going to be a 6.5% discount. But when you factor in a year of common charges that we got, a storage space, all the seller concessions that we got, it's probably about a 12 to 13% discount on an already very low listed asking price.
Right.
Beautiful new development, very high end in the meatpacking district, in the 1,700s a square foot. Like, that's really low for a new development product there, which was selling years ago in the mid 2000s.
Yeah. And I imagine this is the kind of environment where the tide goes out and you kind of got to see which developments need to sell, and those investors, because it's like you said, it's all about the debt stack and the investors back there and the terms of all the construction terms, all that kind of stuff. I don't understand that whole thing. But all I know is that some developers can handle this and some developers can't, and those that can't will lower their price and they'll try to move property.
Look, Extel has years and years and years and years before they have to consider any sort of fire sale, right? They
right.
Refinance and they have a lot of options. And
related.
But look, Related also has a lot of issues in Hudson Yards. Hudson Yards, thanks. Hudson Yards right now because of the retail portfolio, right? Yeah. And the condo sales just in general, not related, but in general, new development condo sales weren't doing great before the pandemic.
Yeah.
So
yeah, that's
while
true.
They might be more realistic on other projects, they don't necessarily have to be, unless their investor is telling them saying, hey, look, we need to kind of just sell this and get out.
Right. All right, guys, we have run out of time, but we appreciate your time for being here. Thank you so much. Wesley Stanton, Jordan Hoch, the Stanton Hoch team at Compass. I am Noah Rosenblatt. That is John Walkup of UrbanDigs. We are talking Manhattan, and we will catch you next time.
Take it easy, guys.
Take it easy.
Thanks, guys.